Hello friends. So today we will analyze the financial information of TASMAC. So friends, this is just a small skit. So today in this video, we will look at the financial analysis of TASMAC, Tamil Nadu State Marketing Corporation Limited, the company which runs the TASMAC shops in Tamil Nadu. Okay, and we will see what is the revenue, what is the profit, how much of it TASMAC earns to the Tamil Nadu state government, and what are the financial irregularities pointed out by the auditors of the company. So this is a very important video, friends, especially for the people of Tamil Nadu. And so don't miss this video. So friends, TASMAC was set up in 1983 by the Tamil Nadu government. So it's basically a government company, state government company, and its business, you all know, is to distribution of wholesale and retail sales of liquor in entire Tamil Nadu. So it's basically a monopoly business of liquor in Tamil Nadu is by TASMAC. So with that, let's now begin the financial analysis of the company. And in this financial analysis, friends, all the information which I'm presenting to you is taken from the MCA website, Ministry of Corporate Affairs website. So this is authentic and correct information. And also for financial analysis, friends, I have taken FY21 and 20 and not FY22 because the accounts of the company are not yet filed with the Ministry of Corporate Affairs website. But still, FY21 is just 1 year old. We will get a good enough picture about the entire company from this information itself. So friends, let us start with the profit and loss account and then we will move forward. So in profit and loss account, let us look at the revenue. What is the revenue made by TASMAC? So if you see revenue from operations of the company for FY21 was 21,000 crores and for FY20 it was 20,591 crores. So this much of revenue is of TASMAC. And then you have other income, which is 306 crores and 291 crores for the last 2 years. This basically consists of interest from deposits in banks and discount on early payment to the vendors. Total income of the company for last 2 years was 21,324 crores and 20,882 crores. Okay, that is the revenue. And the breakup of revenue, if you see, main revenue, if you see, it is sale of IMFL, which is Indian Manufactured Foreign Liquor, that is 19,000 crores. And sale of beer 1,900 crores. Okay, so IMFL is basically all alcohol drinks which are other than locally produced, right? Other than locally produced, which can be which are locally produced drinks are like toddy, arak, and fenny, and all those things. The local branded, locally produced ones, and the branded ones like McDowell's, Black Dog, Black Label, which can be imported into India or manufactured in India. Those are known as IMFL. Okay. So these are the important things about IMFL. Then if you look at the revenue to the government, Tamil Nadu government, how much it has earned, if you see from this, if you see is the income from taxes only. The government earns only from the taxes. So the sales tax or the VAT paid by the company to the government is 18,579 crores for FY 2021. For FY20 is not available. I don't have the data, but 18,579 crores. Okay, so this is because alcohol is still not under the purview of GST, friends. Okay, and hence the old regime, that is sales tax and value added tax, is only applicable, and excise duty. Excise duty goes to the central government. Sales tax goes to the state government. Okay. Then if you come down more, the gross profit of the company for last 2 financial years was 300 and 341 crores. Okay, 300 and 341 crores, and gross margin is very, very less, 1.43% and 1.66%. Okay. Now, whether the company is selling at very less price or MRP is less, or whether the whether the cost of procurement is very higher, that I don't know. But gross margins look very, very less for the company, 1.43% only. And then if you come down to the bottom line, if you see the profit, actually it's not profit, it's loss for the last 2 years, which is 161 crores and 55 crores for last 2 years. Okay, but before that it was making profit. Okay, the exact amount I'm not able to tell because the data which I downloaded from the website is not very clear. looks like 13 and 18 crores in FY19 and FY18, but it's not clear. I'm not able to tell that. But before that, they were making profit. These 2 years, they are making losses. Okay. So now let us go to the balance sheet of the company and see its financial details. In the balance sheet, if you see, the net worth of the company has completely eroded in the last 2 years. It is negative 267 crores FY21 and negative 105 crores in FY20. Then if you look at the long-term borrowings of the company is nil for as on last 2 years, so which is a good sign. Long-term borrowings is nil, but the company has huge short-term borrowings, okay, which is 1,800 crores and 1,700 crores in the last 2 years as on that date. And all these short-term borrowings are in terms of secured loans or cash credit facilities or unsecured loans from all public sector banks, which includes like Indian Bank, Union Bank of India, Indian Overseas Bank, State Bank of India, all these things. You can look at the chart in the table here, but this totally comprises of 1,819 crores. Then if you look at the current ratio of the company, current ratio is 0.83 and 0.87 for last 2 years, which is not so very healthy sign. Current ratio should always be more than 1. So that is one particular thing in the income coming to balance sheet. And if you look at the cash flow from operations of the company is positive 157 crores for FY21, negative 293 crores for before that. So cash flow from operations recent year, it is good and healthy. Now friends, let us look at the financial irregularities which was mentioned in the company's annual report itself. Okay, from that only I'm quoting, I'm not quoting anything else from anywhere. The company has, in the note 13, it has mentioned in long-term loans and advances, there are shortages and misappropriations in the retail vending shops, okay? And for that, the company has made provisions to the tune of 9.8 crores and 8.26 crores for last 2 financial years, okay? Because some of them are outstanding for more than 3 years. So basically, there are shortages and misappropriations in the retail vending shops, which the company has to recover, but it is not able to recover, and it has made provisions for 9 and 8 crores in the as on last 2 years. Okay. Then if you go to the note 31 of the company, so they have mentioned that various like for example, cash shortage last 2 years was 1 crore 61 crores, embezzlement under follow-up 9 crores 10 crores. The insurance claims both these 2 years was 3 and 3 crores. So totally these are recoverables of 14 and 75 crores. Okay. So embezzlement means friends like theft, fraud, mismanagement of funds and all those things. So if you see, cash shortage and embezzlement in both these years were 10 and 71 crores, which is very huge. And out of this total 14 and 75 crores, the company made a provision of 13 and 11 crores, and the net amount after the provisions was 79 lakhs and 63.58 crores. And out of this above 79 lakhs, okay, the company has recovered 64.86 lakhs, and out of 63.58 crores of previous year, the company has recovered 63.13 crores. And the balance amount after this, which is 13 lakhs and 44.16 lakhs, the board is of the opinion theft and these shortages are recoverable from the employees and insurance companies. Okay, but you have to remember one point, friends, is that these recoveries are made after making the provision. Okay, not before provision recoveries. For example, assuming what has happened is there is a cash shortage of 100 rupees. Then the company, after 2-3 years, it is not able to recover. It made a provision of 70 rupees. So now net receivable in the books is 100 minus 70, 30. Out of that 30, company is saying we received 20. Balance 10 is receivable. So still out of 100, company received only 20 only. And this received is whether it is from insurance claims or cash shortages or embezzlement, the company is recovered from employees, that is not mentioned in the report. Okay. So this is the information, whatever is given in the annual report, I'm just saying as it is. Now friends, let us look at the qualifications given by the statutory auditors of the company, okay, whatever they have given. And some of the qualifications only I'm telling in this video. There are many qualifications, but some of the important high risk qualifications is what I'm sharing in this video. The first one, if you see, what they are telling is that the company does not generate any invoices on sale of products, and the revenue is measured manually based on MRP printed on the products. And the quantity sold is measured manually based on the inventory received by the retail vending shops by adjusting the opening and the closing balance of inventory. Which means they are not measuring what is sales actually, but they are just doing the difference between opening and closing end of the day, and the difference is taken as sales. Then second thing is that the sales are not billed as and when the sales takes place, and there is no documentary evidence invoice wise to substantiate the revenue reported in the financial statements, right? And the billing machines provided in the retail shops are either not in working condition or not used as found during the audit. The shortages in the stock verification process carried out by the staff and the internal auditors are recorded 1.5 times MRP, but this is only detective control and not a preventive control. Okay, and hence they are saying that we are not able to obtain sufficient and appropriate audit evidence on the revenue and inventory, or auditors are saying, friends. Now, what is the reply TASMAC has given? At shop level, the stock receipt from depots is recorded in the stock and sales register. Retail shops are maintaining brand-wise opening, receipts, sales, closing stock, whether manual or computerized, still not told. And the shops have been told to issue bills. However, during the peak hours in the evening, they find it difficult to give bills due to huge crowd and most of them are in intoxicated mode. Okay, however, shop people are preparing bill at the end of the day cumulatively, and the sales collected is deposited in the bank account next day. Shop personnel are reporting by SMS every day after the closure how much sales is made, and which is cross-checked with the amount in the bank statement. Okay, and in the month end physical verification report is submitted by the shop. The shops are subject to inspection by various people, flying squad, and in case of any shortages, FIR, charge sheets is filed and recovery is made with penalty and interest. Okay, and also, so this is the reply, but understand friend, these are all not so very, if all these things are there, then why the cash shortages, embezzlement of funds, has happened, which I told in just now in this video, in the books of the company. The controls are not so strong. That's why auditors have also pointed out, and that's why the books of accounts also show cash shortages, embezzlement, and all those things. Okay, the streamlining of process is required to be done. And also they have told that to address this issue, computerized system of billing, end-to-end computerization will be implemented to track each bottle through a QR code from its origin to its sales. This is a good idea, good initiative, but this study was done in 2019. Then in 2020, they earmarked 255 crores for this system end-to-end computerization. 2020, it was not yet done. 2021 also not yet done. 255 crores still amount it was there. Now in 2022, they have done or not, we don't know. We have to, once we get the books of accounts or financial statements, then only we can come to know. But still, at this 21st century, everything is computerized. But the company is still following old methods of manual inventory, manual tracking, invoices not issued, not working condition. I mean, this is not expected out of a company which earns 20,000 crores, okay, and that too which is accountable to the citizens of the country. Then second qualification is the company is not maintaining records showing full particulars including quantitative details and situation of fixed assets. The company has a program of verifying fixed assets at retail vending shops, depots, district manager's office, reasonable intervals. However, such verification has not been reconciled with the fixed assets register maintained by the company. Auditors have pointed out. Reply by TASMAC, corporate office maintaining FAR containing details of all FA in all locations. The senior regional manager, deputy depot manager officers, depots are maintaining FAR with all details. If they are maintaining, why should auditors give qualification? Auditors will not generally give qualification if everything is maintained. Okay, so hence this is one point which we should be aware of. After that, friends, the third important qualification which I would like to bring out is that auditors have told the company's internal control system has to be strengthened to evaluate if the procurement terms are in line with the benefits that accrue to the company. Auditors have pointed out control systems. TASMAC has given reply that TASMAC has well laid down purchase policies such as approval of new brands by government, Commissioner of Prohibition and Excise, review of cost sheets submitted by suppliers, price negotiation, etc. And everything is done based on approvals, everything, okay. But in spite of all these things, auditors have given a qualification. So it is something, which points out to certain irregularities in the company's processes, okay. And as I told, these are just some of the few important qualifications which I have told. There are other qualifications also mentioned by the auditors, like reconciliation of books of accounts between the head office and the various depots and branch offices, right? It is not, some of them are maintaining in physical form or in different software, so it is not reconciling schedules and all those things. But those are also there. Based on the information available, I think the company has to really scale up its books of accounts system. At 21st century, you can't be having invoices are not issued, books of accounts not maintained properly. So that is one thing. So with that, we come to the end of this video, friends. Thank you for watching this video. But one important thing which I want to tell you is that this video is just for education purposes and information purposes to all the people of India, and especially people of Tamil Nadu. Citizens should know as to what is happening in the TASMAC company. And also I've given the link in the description to the annual report of the company. You can download and watch it from there. And share this video with maximum number of people so that everybody comes to know about this financial condition of TASMAC and they are well aware about what is happening in the TASMAC. Thank you for watching. Please share this video. Until then, this is C.S.Karthik signing off. Thank you and namaste.